A trade. Charles Moon, stock strategist, Prosper Trading Academy, is with me, and we're taking a look at Okta right now at $92 and change. How would you go about an example trade today, Charles?
Honestly, it's a little bit of a gamble. I would say this is a variation of a lottery ticket trade. We know that the implied volatility on the stock is around 10%, maybe even 11%. So it's a pretty large expected move. And from the charting standpoint, it's actually poised for a really big breakout. If it breaks through and gets above this $100 price, it could get all the way up as high as around $110 on a really robust earnings and earnings reaction. This thing could actually push up towards 115 and head to fill that gap near that 125 price, their 52-week highs. Now, this is also teed up because expectations are down on the stock. Obviously, since the last quarter, they've been trending down, working lower, falling below $100, but starting to hold at an accumulation range. This also means that people are expecting Okta to do well. And if they disappoint once again, they can fall down into the range of $80, but as low as the mid 70s. So what I really like is a strangle for this week's expiration, the 103 call, the 83 puts. Now, this is going to cost somewhere between $3.50 to $4 for the spread. The risk is going to be around $300. So it's a high risk play if we're taking it. However, if the actual break does occur, the return could be nearly threefold, especially if the breakout does occur to the upside and really seeing that really big push towards the gap fill. I would never put it past a tech stock to make a substantial jump overnight off of earnings, but obviously depending on how Wall Street digests that news. But this stock is really primed for a big move either way, up or down.
Yeah, understood. Okay, so look, I mean, when you talk about 10 or 11% implied volatility, people better get ready for some action. That being said, what about the market action we're seeing thus far today? I know markets have been under pressure in the longer term. Over the last week or so, the S&P is down 6 of 7 days, but we did see the Dow hitting a record high on Friday. We did see every single sector higher on Friday at one point. Now what? How do you feel about the market action going forward?
It was really weird to see a lot of risk-off trading and a lot of names that retail traders absolutely loved. And what really happened in names like Palantir and AMD, that they would pull back 4 or 5% off the highs and immediately be bought up. And we saw a little bit of that action, but we really saw a little bit more depth of the pullback. So it told me that the selling pressure was very different than what we have seen over the last few months. But that being said, it culminated into a huge explosion on Friday. A little risk-off trading today, not surprising, with the Dow making record highs, SPY making record highs. These are, typical when, we have strong gains on a day that we'll see a bit of a contrarian follow-through. But that being said, I think the market is poised for another rally. I think that, again, the major concerns are still, effectively behind us. The FOMC is now signaling that they're ready to start cutting rates, which is what the market wants. If we get September, that again still prices in the hopium effect of potentially having a third rate cut in the picture. That can't happen unless the Fed actually starts to cut in September due to the fact that there's only 3 more meetings. So, with all of that in the picture, that just means that the market is going to continue to rise. I could see a very small grinding breakout that we saw starting in late June that carried all throughout July. It wouldn't surprise me if that's really what happens leading up into the next FOMC meeting, news withstanding.
Okay, Charles Moon, great to see you. Prosper Trading Academy. Really appreciate it. Thanks.